How we doing, boys? How is everybody doing? I'm going to try to make this quick and sweet as apple pie. Equity markets continue to tread water beneath significant resistance points as investors weigh the onslaught of earnings reports. While most reports are better than expected, the news is often mixed regarding an analyst expectations, and guidance is more in line with the consensus than not. In the eyes of a market that needs improvements, the news is okay, but not enough to spur sustainable rally. Next week will be a challenge for the market. Not only does the Q1 reporting season truly kick into high gear, but PCE index is due out on Friday as well. Given the state of inflation and interest rates, this reading may be more important than ever. Hot report, or even one that is slightly cooler than before, may not be enough to excite investors. With high inflation, the market needs to expect interest rates to remain high and that general demand will continue to decline. Now, that's what the overall macro has kind of been looking at. We've been talking about this for weeks now and days as we go into that. So quickly, just looking at foreign markets here. Asia's trading a little bit lower after some data. China foreign minister says Beijing pursuing modernization. Biden to announce re-election campaign. Japan services activity expands in April. Japan factory activity down in April. Inflation shrinks to 3.2% in March, so that's good there for Japan, but obviously going to need to see some of those activity numbers increase. British consumer morale slips in April, and then we saw a couple of things going on with the Fed today. Logan had spoke earlier, closely watching banking stress, and then Bowen was talking about focusing on lowering inflation. Again, we'll wait till we get a little bit further into these earnings, probably towards the end of next week as we go into PCE, and we will take a look at that. Obviously, we'll talk about Tesla here in just a little bit. But other than that, let's take a look at markets overall. Give me 1 second here. Let's go ahead and jump on over to the replay from last night into today. Go ahead and kick that off while I go through this here. So looking at a context analysis of the market here, the overnight session was trading in a narrow range above that 41.63 during the Asian hours. 41.83, 41.63 were levels that we were closely observing as discussed. Now, when the European session opened here, the market witnessed a decisive break of that 41.63, leading to VIX breaching its resistance level as well at 1730. We can see we broke the trend line there, which set us up for the pushback up, and then a failure on the second time, which is where we said we were going short, and we can see where we pull down here. Bounces were being sold for the majority of that. As we were seeing the VIX VX previously broke resistance as support. However, as soon as we get back into the RTH cast session and opening, VIX dropped below the 1730, and we talked and walked through the double distribution that formed during the overnight session, emphasizing the significance of buyers regaining that 41.63 level. So you can see there on the RTH opening was virtually identical to that of yesterday, featuring a true gap to the downside. But despite opening near the overnight session low, sellers did fail to establish immediate downward momentum, which was resulting in a resulting in the corrective activity and the gap being filled already into the second half of the IB period, being that 10 to 10:30 that we just saw there on the replay. The market experienced a pullback before the gap was filled, but buyers were quick to respond, coinciding with the VIX's test of its resistance level, once again at that 1730. Following that gap fill, though, you can see there that the market was essentially consolidating in and out of yesterday's range. And we saw a test of our 41.63, which was rejected to the tick. And you can see these levels. That's why I've left these on here even during that replay, so we can kind of see it, how they are reacting to those as we go. Despite facing rejection initially, buyers persisted and successfully breached that 41.63 level, resulting in a remarkable surge in buying activity. And we saw this on the tape in real time, where on the sell, we saw it just once that passive buyer stepped out that was absorbing all those, that just massive aggressive selling stepped in. And then on the opposite side, we saw the exact same thing, which led to the failed breakdown. That on the upside, the passive sellers, once they were out of the way, all of that aggressive buying came back in, and we saw a surge in that buying activity. This heavy buying effort, though, was absorbed by those passive sellers, causing that upward move to stall out at the top. So once the initial were out, they got that stall, the push up aggressive, and then stopped again at the second stop here, which put us right back right in this distribution right here. And that's kind of been the name of the game all week, which these four levels right here have pretty much been especially the top three have been the entire week, essentially, more or less, where we've been trading off of over and over almost every single day. Subsequently there, after that stall, aggressive sellers did enter the market, creating favorable scenario for short traders to capitalize on the trapped buying inventory. And then we saw that reversal that proved quite to be severe, but then we put in that daily low. Then same thing, back up. Now we were about 6 handles off from that downside target of the 41.31 there. Today's session was balanced, leaving unfinished business at both extremes. Sellers managed to form another lower high and a lower low, successfully breaking the 3-day balance to the downside. This means now here, though, that the daily is now one time framing down. However, we are essentially right in the middle of the attached 15-day volume profile that I was talking about earlier, and we will show that again tomorrow since it's weekends. Following Tuesday's failure to maintain a directional move away from the main distribution of the multi-day balance area, the market has now returned back to value. This type of responsive activity, though, is commonly observed in the absence of inactive activity outside of value. If the sellers manage to sustain the pattern of lower highs, their primary objective is a traverse of the value area towards the 4114, 4098 zone down there. Buyers aim to regain the immediate resistance level of 4163, which could potentially pave the way to challenge the 2 daily excessive highs. It is going to be crucial to stay nimble as we're currently positioned in the middle of both the short and medium term value. And what we're going to need to see here is they tried to regain this earlier today, and they were not able to do it. So they need to get back above this trend line. This is everything. This in the immediate term is critical. Yes, these levels will come into play and they will remain important, but they absolutely need to get back above this trend line to make anything else work. Now let's go ahead and take a look around the rest of the market here. We will talk about tomorrow, and we will leave a little bit of that in the chart for after this is done here. So S&Ps did fall about 0.6%, while about 34% of stocks closed in the green, as the VIX did rally back above that 17, and that key level is going to be the 1730. Now, what's interesting here is the S&Ps have not had a negative 1% drop in the last 20 days, which now is the longest streak of the past year. If we take a look here at the Nasdaq, the Nasdaq fell about 0.8%, the Dow fell about 0.33, and then the Russell was down just about a little bit over 0.5%, down about 0.54. 3 of the 4 major U.S. indices, equity indices, have a strong bullish immediate postures, while the Russell has a weaker bullish posture than the other 3. And we can kind of see that the Russell has been having a little bit more trouble. Now, it's still in balance, but it does just have a little bit weaker bullish posture than the other 3. Again, 3 of the 4 U.S. equity indices are trading above their rising 30-day SMA, while the Russell is above it, but it is a falling 30-day. And of course, we use the 30-day and the 14 inside of our Keltners that we like to watch for more of a short-term to medium-term time frame. So we like to use the 30-day as kind of a gauge for immediate to near-term strength or weakness. Moving on to the dollar here. The U.S. dollar was pretty much flat today. It is now back to a weaker bullish posture, but it also is now remaining below its falling 30-day moving average. So that's not as big of a deal, but we do like to keep an eye on that just to kind of keep a gauge on what the dollar itself is doing. Taking a look at gold, and I've been talking about this the last couple of days, and we just talked about this earlier. Over the weekend, we will have a full metals update that will go into deep in detail on gold and silver, and then we will touch on aluminum, platinum, palladium, and a little bit of aluminum just to give some trade ideas. And gold we do see setting up for a nice move here shortly, and silver, so we want to get that prepared, but we're going to wait till the weekend just so people don't focus on that too much. Gold did push up a little bit here, rallied slightly, about 0.39% on the day. It does remain above its rising 30-day moving average, but it now has a weekly bearish posture, but this is going to be very short term. If we jump out to like a 4 hour, we can kind of see we're actually still trading, quite strong here, but we've just been seeing a little bit of a nice little refreshing pullback and finding some consolidation here, which will set up for the next big move. Now, this is the key zone that we've been watching and talking about. We went over this last night quite a bit in detail. Above here, we want to look for bullish bets. Below here, we'd start to look for more bearish bets. And again, we'll get way more into that this weekend. Let's take a look at oil here. Oil fell about 2.45%. This now is the fourth straight session of falling and continues to breach the gap created by the OPEC decision a few weeks ago, which is exactly what this gap is here. We talked about this last night. We've talked about this many days in a row here. We actually got a nice short up here last week, and then begin this week. We continue to cover these, though. I do not want to continue to hold these overnight, even with their looking bearish as they are. We don't want to take that risk. That's just unnecessary when we know we can catch another nice trade very soon after that. So we continue to watch this gap here. This has lowered a little bit. We got a big drop today, like that 2.45, like I just said. And then as of right now, it is trying to make a little pop up right now, but I think it's still a little bit in the red right now, isn't it? Yeah, just slightly red. But we'll keep an eye on this OPEC gap as we move forward. We'll talk a little bit about this tomorrow for sure. And then, of course, over the weekend especially, we will talk about it. We're going to take a look here at bonds in a second. Foreign stocks were flat today, but they're still outpacing U.S. stocks on a relative basis, and they do remain near their 3-month high. We will look a little bit at that next week as we continue to go through earnings. Now, taking a look here at the 10-year U.S. Treasury yield, it does have a weaker bullish posture as well, but it did fall to 3.54% today, but it does continue to trade above its falling 30-day moving average. And again, we don't look as much at those moving averages on something like this, but it just gives us a good clue that it has been consolidating down here, but it may start to rise back up. Of course, this comes into question with the 10-year inversion yield curve, and that of course is something that is very important to focus on and just keep in the back of your minds. If anything, you don't have to understand it 100%, but just trust us when we talk about it. And of course, it's important to understand if or it is not inverted, as it is inverted right now. Taking a look at the longer market bonds here. ZB bonds here right now, they rose about 0.85%, but continue to have a bearish posture. And again, we've just seen this like slight pullback and some acceptance down here, some consolidating. If we go ahead and jump out to a 4 hour, we can kind of see the overall trend. We'll jump out to the daily, and we can really see the overall trend here on the weekly, as this has just been the name of the game now here for a couple of years. But this is definitely where we've started to kind of see more consolidating over the last couple of months here. But we will definitely keep an eye on this as we move forward. Let's go ahead and take a look at all of the SPY and SPDR sectors that matter today. So looking at all the market cap weighted sectors in the U.S., we do have a strong bullish immediate posture. Now today, the consumer staples up here at the top, XLP, we did have a nice move up. They were just up 0.24, but compared to everything else, we'll take it. They were the only sector, though, as you can see here in the green today. And then the laggard being discretionary here, XLY, was down about 1.54 as the worst performer. And of course, this is heavily weighted by Tesla and Amazon. So with Tesla slamming the brakes on the market here today, it is no wonder that they took the fall that they did. I believe, what was it? Tesla shares tumbled about 10% after reporting price cut, how the price cuts hit profits. And then shares of the other electric vehicle makers also lost ground, including Lucid, Rivian, Ford, and General Motors. So it's no surprise to see XLY down here around that. Let's jump back to our ES chart here real quick. We are on a 5-minute. Let's jump up to a 30-minute just for sake of myself. So obviously we know directly in our path is going to be this trend line where we need to get back above. We will have to watch and see for these important levels here to be recaptured. So basically we're kind of in middle of nowhere. If we come down here to test this 41.47, If this fails, I want to try to look for a short to take down to 41.39, 41.31. If this holds, we might be able to get a bounce back up. I'm bullish back above 63, all the way up into 70. Now, this really needs to get up here, but this path is not going to just be a straight shot up, right? They're not going to just take this straight up. If they get back up here, we're going to need something sort of like this, right? Where they can consolidate, test it, then push through. This is going to take a lot of work, and I don't really think we're going to have some huge move that's going to happen tomorrow. So this is well going to go into Sunday, if not into Sunday, Monday. So that is something we will talk about tomorrow as we move forward. We will talk about it over the weekend, of course. It is something that is going to be very, very heavily on focus. We will see you guys in the morning at about 9 a.m. for the pre-market prep to go over a couple of the levels that we're going to be watching for in the VIX. Moving forward here will be 1810, 1622. Those are the extremes. The 1730 will remain quite important as we do move forward. Other than that, let's see here. We just kind of had let's take a look real quick at these individual FANG names for tomorrow. We can see AMD here has had quite a crazy volatile week here. Nice move up that was quickly sold off with the rest of the market, but held up after hours. We can move down to, let's take out Google here. Google had a really strong move up, sold off, but then was able to recapture it after hours. Sold a little bit down there, but Google looking decent as we head into Friday. Nvidia had a pretty awful day there and fell into the entire day pretty much. You can see the VWAP was pretty much holding the entire move of all day. So we're going to watch for either a bounce or a continuation lower on Nvidia. Tesla, of course, we know from the earnings. I mean, this move has just absolutely just killed it. So we will see if there's some profit taking that might give us a nice little dead cat bounce for a possible lotto trade tomorrow. We'll talk about that in the pre-market if we see anything happening there. Amazon had a beautiful move here back on the 19th into today. But as we see here, we've kind of flattened out. So we're going to be very, very careful to watch any continuation up or down. I would actually like to short this for a lotto tomorrow, but we'll see what they give us by pre-market. Microsoft has been consolidating nicely here for the last couple of days, so this might be winding up for a nice move as well. We'll have to take a look at relative volume in the morning. Take a look at Netflix here. Netflix, same thing, very, very stagnant after earnings so far, so this may be potentially setting up for another move as well. I don't like this as much as I do the other two, Microsoft and Nvidia, for a possible volatility move for a lotto. Apple, of course, here been very, very volatile the last couple of days. We'll have to see what happens here. Now, these levels are going to be very, very clean and easy to follow on Apple tomorrow, so we'll definitely keep an eye on this. Now, whether we trade it or not as a lotto trade, we'll definitely watch it as we do every single day. And, of course, here, last but not least, good old Meta has had a little bit of a bearish posture as it continues to move down, consolidate, move down, consolidate, move down. We'll see if that trend continues tomorrow and into next week. So that about wraps up what we want to see and look around here for all of those ideas, guys. So we will have to see what they give us and if they have any sort of anything else on the table tomorrow when we get up. We'll, of course, go over that in the pre-market trading here. I want to take one look at these before we go out here. So it looks like I'm looking at these foreign markets down here, just kind of because we're not quite into, they should be having Europe coming online here any minute for the session going out. And let me see here. I'm making sure that through our notes, we should be good. Let's see here. I feel like we are missing. Let's see here. Plunges at close with her. I just read that. I didn't even look over it until it just now. That's kind of funny. I didn't realize what it said for the market there today. That's pretty ridiculous sometimes. But I mean, I get it, right? They're always going to give us some sort of ridiculous reason for the market to come down. Let's see here. I think that's everything, honestly. Don't really see anything else that we're missing. Of course, I'm probably missing something that I'll remember when we get into it. All right, guys.